Hey, my name is Grace Effium, and I'm the head of enterprise here at Lendsqr. I have a guest speaker here with me, and her name is Unyime Tommy. She is the managing partner, CEO, everything assuredly, and she will be joining us to just walk through the ABCs of direct debit and just be able to share insights on direct debit, which is a topic we're going to be discussing here. So let's get this started quickly. Hi, everybody. So this is going to be, we started out with an introduction. We're going to walk into the ABCs of direct debit, and Unyime is just going to give us a big background about herself. And then we'll go into the Q&A with the host and then conclusion. We're keeping this very simple, very interactive, and keep your questions coming. We're here for you. Unyime, how are you? You're muted.
Yeah, good morning, everyone.
How are you doing? Are you ready for us?
I guess so.
Okay, let's get this started. So we're going into the ABCs of direct debit, like I've mentioned, and we'll just be picking a few questions and then we'll talk through them and get insight from our guest speaker and from myself. The aim of the webinar and what should you be expecting. So we're here to educate lenders on how direct debit can pretty much streamline loan repayment processes and also enhance your operational efficiency. So what should you be expecting? You get more insight on the benefits of loan repayment using direct debit, more tips and from our industry experts, get a clear process for incorporating direct debit into your lending operations, and then you're going to engage with us, ask us questions. We are here for you. So we're going to go on to the ABCs of direct debit with Unyime. And yes, so we'll start with the first question, which is what is direct debit?
Okay. So direct debit. So direct debit is actually a payment method. So you can see it as a payment method. But in this instance, right, it's directly from your account. So most people refer to it as account-to-account payments, whereby the customer's account, in this scenario, your borrower's account is mandated for the amount they have borrowed from you, and then the account is debited on the schedule that is set. So every mandate more or less comes with a schedule, and the schedule contains the amount to be debited from the customer and from the borrower or customer there, and then you as the biller gets credited of the amount once it's debited. So the end is the direct debit, so account to account.
Yes. Thank you so much for that quick description of what direct debit is. And if you have further question on what direct debit is, you can just drop a question on the Q&A session right below. The next question is, why do you think lender needs direct debit? I understand that there are other methods of repayment. I mean, we have cards, we have the option of users transferring funds to the lender when the loan is due. But why do they now need direct debit as a lender?
Well, for one, I would start with the cards, right? So for cards, we all know the issues with cards today, right? Users can decide to go and block your card after you tying it to a payment schedule, right? So what we direct debit is the account. So what that means is that you have authority to debit the account as at when due based on the mandate has been set. So if the worst case scenario that can happen there is closing the account, which is something that rarely happens. So the power now is like you have more power on the account to debit, right? And for them to actually go all the way to terminate the account, it's a longer process as compared to how cards get missing or cards get expired. So with account, there's no expiration, there is no loss, right? It's directly on the account.
Okay, thank you very much. Our lenders that are here, well, it means that you have to have direct debit as an alternative to either any other repayment methods that you have. So what are mandates in this instance? You've mentioned a mandate. What are mandates?
So you can see mandates as a permission slip, right? Something that gives you authority to be able to do something. And in this scenario, basically, is the customer giving you authority to debit the account on a specified schedule that both parties have agreed to. So that's in layman terms what a mandate is.
Okay, and So basically, if I'm a customer and I've given you this particular permission, it authorizes me to be able to take funds from the account and based on the authorization that has been given. Okay, thank you so much. We'll go to the next question or the next ABCs, and which is what are the types of mandates that are available for lenders to leverage?
Okay, so today there are two types. The paper mandates, which I think everyone is accustomed to, whereby it's either a letter is sent to the bank or a form that is duly signed by the customer or borrower is sent to the bank, and then the bank treats that as an authorization for you as the borrower and for you as a lender rather to debit the account. So that's the regular one that we are all used to, right? So in this scenario, the customer is signs a document, and then that document is sent to the bank. The bank reviews that document and grants the required authorization for you to be able to debit the account from time to time. And then you have the electronic mandate, mostly called e-mandate. In this scenario, right, it kind of eliminates the whole paper process, right? So this is simpler, it's easier, and it's a lot faster because authorization can more or less be gotten within the same day, even under an hour. What this process involves is basically you as the lender would, initiate a mandate on the customer's account. The customer gets a notification to follow a set of instructions, basically to authorize that transaction. And once they do that, right, completing the set of instructions, then you are able to automatically debit them based on the schedules in there. So in this scenario, the customer grants consent. So see it as a consent system. Customer gives consent to you, and then you're able to debit. And the bottleneck that comes with the bank is kind of almost eliminated.
Okay, thank you for that. I'm just going to add to that. So pretty much this automation and these different types of mandate, the one thing they have in common is almost like how you can actually just add installments, or maybe the payments can be scheduled based on what the lender pretty much wants. Interesting. So we'll go to the next question. And when do you know what type of mandate to use as a lender? I mean, you have to know which type of mandate is required for you to be used. So when can I know as a lender?
Well, I think it also depends on your customer base, as it were, right? And also what is also available to you, right? So I think using the Lendsqr system today, you would know that you have both options available, right? And I think both options available also ties to the bank that's also available too. So if your customer has a particular bank that is not supported, then that's when you may think to use the other one. But most often than not, right, one that is supported on paper is almost immediately supported by the electronic variant. And the electronic variant is actually much more easier because, like I mentioned, it removes the banking element where you have to wait for bank approval, which can take from days to weeks before that approval is gotten. So it's just basically based on what is readily available to you to use, but both are advisable, but e-mandate will be most preferred.
Okay, e-mandate it is. Thank you very much for that. So for direct debit, what is the process around direct debits and mandates? More like the NIBS workflow. How does it work, and how can lenders go about it? What workflow can they use pretty much?
Okay, so I think you would write off for lenders, right? You would mostly rewriting of authorized billers that have integrated to NIBS services, right? And I think that's one of the services that Lendsqr is offering to you today, right? So you're writing off that. So what typically would happen is you are profiled as a biller, and then as a biller, right, you can now initiate mandates on your customer or borrower's account, and that goes. So the typical process would be when the biller initiates when the mandate is initiated, basically, right, it goes to the bank. If it's a paper process, like I mentioned, it goes to the bank, right, and then the bank authorizes it, and based on that authorization, then the payments provider can now start debiting that account that has been authorized. If it's an e-mandate flow, right, it's almost similar, but like I mentioned, the customer just needs to initiate the consent from their own end. And I think the consent today involves them sending a token to a specified bank account. And once they do that, right, the authorization, the account is mandated, or rather it's authorized to now be debited subsequently. So it's it's initiating the request with needs, more or less, which is initiate the mandate, then the biller from the biller's account and biller side, then it's approved by the bank or consented by the customer, and then the payment service provider debits it based on the schedule that has been set up.
Oh, thank you. If you're out there and you have further questions about this process flow, please just drop it on the Q&A session and then we would get to it. And I'll just take the next ABCs, which is, what is mandate activation? So you've spoken about mandates, you said you need to activate it. What then is mandate activation?
Okay, so activation in this scenario more or less is that's more like the authorization that is being given, right? Whereby you have the customer now has consented that, okay, this lender can debit me, and in debiting me, right, means that I have now, given the authorization. If it's a banking process, the bank has approved that loan and approved that mandate on their own end for it to be debited on behalf of that customer, on behalf of that lender rather. And then if it's the in-mandate route as well, the activation process is you sending that token to a defined bank account, which is more or less a NIBS bank account. And once that is received and acknowledged, then that mandate is activated.
Okay, thank you very much. And this is the other question. And I think now that we've mentioned that you need to involve most banks, people will probably want to know if all banks in Nigeria are allowed direct debits.
Well, for the most, right? So I think in terms of the NIBS system, right? If NIBS being the focus area, on the NIBS system today, right? Knowing that they are kind of the central switch of the country, right? So all the banks that are on NIP today, which is basically on NIBS today, can actually initiate or can manage direct debits. However, not all of them have been profiled, right? But most have been profiled. At least I think you would have the top 25 banks in there, right? And if you have your bank and it's not profiled, it's a conversation with NIBS to get it done, right? But most banks have been profiled. But basically, getting that done with a conversation with NIBS. But most of the banks you would use, like as long as you're a licensed entity on NIP, you can actually be on direct debit service.
Okay, thank you very much. The next question is direct debit what it's for alone? Why should we go through the stress of direct debit?
Well, I think starting from even why direct debit in the first place, right? The whole removal of cards, right? Because when the card expires, the customer still has to come back to their account to change the card to a new card. They may file in their card as stolen, right? So all the bottlenecks. So in this scenario, right, it removes that friction, right? The friction is removed whereby there's a need to change anything because your account does not expire to start with, right? Your account cannot be missing, right? Unless you go and say that, oh, my account, unless the customer or the borrower decides to go and shut down their accounts, which is in rare cases almost something that rarely happens, right? But if they do, then that's the only loss there. But it's worth it for a loan because in this instance, you actually have direct access to their account and you can debit the account at the specified time. And there's also the concept of partial debit. Even if the person doesn't have the complete amount at that instance, you can also debit the amount that is available. And it's a lot much more easier because it's efficient means of, and it reduces the whole late payment conversation.
Okay. So it's actually even worth it. I'm thinking back to even the idea behind people repaying a loan. I mean, with card, it's actually easy for people to just cancel it if they do not have the willingness to repay a loan. You can just say my card is stolen, and that's it for it. The lender automatically no longer has access to debit you for that particular loan. But of course, with mandates, you really cannot just go and start closing your account when you have a mandate sitting there at the bank. Okay. Thank you very much. So we'll take the next ABC. Can you explain the difference between the direct debits and like a standing order?
So okay, so for standing order, this is basically the customer giving an instruction on their account, which most often than not may not be a recurring instruction, and is almost totally at the I call it the power of the initiator, which is the person that initiated the standard and the standing order, right? However, for direct debits, it's you that initiated it, and once it's authorized, once it's authorized, right, you kind of have control over it for the duration that it is valid for. In this scenario, right, as a lender, you are the one that's setting up the schedule, that you're getting your money back, right? So you are the one setting up the amount. In a standing order is a customer, and the customer in this instance can decide at whichever time to go and call up that standing order, or even not, stick to the modalities of the agreement to set up that standing order. So that's basically the major difference between both.
Okay, thank you very much for this. We'll take the next ABC, which is, are there any regulatory requirements or compliance consideration associated with using direct debits?
I think for us with other payment methods, right, the same, I will more or less say the same laws apply, right, because you are collecting people's money, right? So you need to have the right, call it the right license, the right compliance strategy to do so, right? Considering money laundering, ensuring that you're not, mandating someone else's account, or someone doesn't try to use another person's account, in this scenario to mandate for their loan repayment. So those checks and balances needs to be in place. So you pretty much be using more or less, let's say, be looking at it the same way you would have treated a card transaction, the same way we have treated a normal transfer transaction, the same stringent, the same policies, the same the same regulations that guides those payment methods also applies here. So you need to consider, dispute resolution. You need to consider cancellation, right? What happens when a customer comes in and say, okay, I want to cancel the direct debit you have on my account, right? You need to have a process for that. You need to have a process for disputes, just in case for whatever reason, maybe they are duplicate, they are charged twice, right? You also need to ensure that you have money laundering policy, monitoring your transactions to ensure that, there are no, call it, bad actors on your system as well.
Okay, thank you very much. And we would take the next one, which is the final one. What are the key factors to consider when selecting a direct debit solution provider or lending operations?
Okay, so considering that is it's a new service in this part of the world, right? Some other parts of the world are more or less used to it. Considering it's a new service, so one of the key considerations there is the user friendliness of the system that is being used, because you need to more or less educate the customer, right? The customer has to have confidence that you have access to my accounts. You will not just be debiting me anyhow, right? So you need to instill that, you need to feel that that would not be the case, right? So a good user friendly interface where that kind of more or less educates them in the process is one of the key things to consider during that period. Showing them what, like I mentioned prior to the requirements, telling them how the process that is involved for them to cancel this if they are no longer interested, how they can raise concerns, right? So like having customer support, efficient one that can, explain the process to them as much as possible. The user-friendly interface, as I already mentioned, right? And then, and also having like payment insights to even know. So if, as a lender, if you're picking a system, you need to be sure that, okay, the system gives you that report to even know when, should in case a direct debit fails, right? So you are able to know that, okay, that direct debit fails. So payment insights and analytics to what is currently happening with the payment with the repayment method that has been chosen. So the same way or the same robustness you would expect in a card and in a transfer process, right? It's almost the same thing that you will be looking out for when you are picking a direct debit solution provider.
All right, thank you very much. So I'm really going to even dive into the more of like scenarios when it comes to like direct debits. So the idea behind all of this is even so much as, how can I even get the money repaid from borrowers? But I am thinking towards the aspect of, if I have mandated somebody, this speaking towards the compliance part of it. If I've mandated that a lender can't have access to funds from a user's account, there is the usual panicking of, oh, I have given you access to my account. What if you come and take my money tomorrow? What if I have not mandated you to give you more money? What if I don't want to use that particular service or provider again? Is it safe that I've done direct debit on this place? Is it safe that I've not done direct debit on this place? And the whole this, but it also all just boils down to lenders even having alternative to repay their loan, because the main idea is not about giving out funds and not getting your money. It's, how do my money come back? Nobody's going into business for you to lose money. It is, let me get my money back. Okay, so I'm going to talk through some of the additional scenarios and additional things that have to do with direct debits that lenders might be interested in, and also to be able to like make it safe or feel safe in using direct debits, because beyond the benefits of it, there is also how safe are my customers' information when I'm using all of this technology, when I'm using all of this solution. If a customer has an issue, how do we address each of the issues? What are like the pros or the cons of using it? Of course, the why direct debit has already spoken to the pros of direct debit. We'll just talk about what other things should I look out for when using this particular services and all of that. But in your experience, just talking back to it, what would you say has been the most, compared to using cards and direct debit, which would you say in your experience generally is more effective way of repaying a loan or getting funds from a borrower?
It will remain direct debits, right? Because that's where the money is. The money is in the person's account, right? So because the person can put a disposable card, like, so many things can go wrong with cards, right? I can decide tomorrow that the payments you took from my account it was a fraudulent transaction, cancel it, and then you have chargebacks and the likes. But with direct debit, all those grievances, is removed, because indeed it did not just happen without you. You were the one that's why the whole authorization activation process is involved, right? Because the customer is involved in that process in ensuring that that is authorized, and your account cannot just be authorized without your consent, right? So that now makes it much more reliable than the others.
Okay, reliable is the key word here, being reliable. I can't even get over the card one, especially the chargeback. The issue of chargeback is also very, 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 would I say, what's the word I'm looking for? Regular, where customers would actually give you access to their cards. And after a repayment has happened, you see customers going to the bank to go and charge back that card that, oh, I did not authorize this payment. And then you're dealing with a lot of chargebacks. Like that is actually very common in the card space. So with this, you can't just wake up, because with the process of mandate, you're actually authorizing and it's going to your bank, which your bank is saying that you are the one authorizing for this mandate to be done. And you can't just wake up and say, oh, I did not authorize this transaction like that, and then issue a charge back. What should lenders be, in this instance, what should lenders be more skeptical about when they're trying to pick a platform provider for direct debit? I know a lender cannot just walk into news and say, oh, I want to integrate direct debit to my system. They probably have to leverage using other people as well. If they're looking at the payment provider, what else should they like look out for in terms of to be able to offer that service pretty much?
Okay, I think the full spectrum of how this scheduling is very important, right? How do their schedule work, right? How does the scheduling system work? Are there notifications when payment fails, right? Can you control the scheduling from your own end as the lender, because you want to be sure that the money is collected? And what happens when the loan has exceeded and you still want to get back your money, right? So you're not just creating a schedule that is just within the constraints of that loan, right? You are creating an extended period of time, right? So you need to look out for that, right? You need to also look, like I mentioned before, the user friendliness of that, because what will happen is if the customers do not understand it, it is you that more or less, like the lender, it's you that will be buzzing and calling to explain, and then your service provider at the end of the day. So you need to pick a system that more or less simplifies this process, knowing that it's something not so conversant with a lot of people, right? So you need to look for something that is simple, especially from the part of your borrowers, for them to understand, for them to know, and for them to be confident in that, like Grace has also mentioned, that okay, just like I don't feel that I have to take my entire money, because one of the things that people are scared of is you are literally getting direct access to my account and you can do and undo, right? So I need to be sure that you are not, taking, you don't have that right to just clear my account, right? So that has to be in play. And then the availability of the system, right? Reliability is very key. Availability is very key as well. And the ability to treat failed transaction, efficiently are things that you should more or less, look out for. And ability to also, more like partial debits. So because you can go into the account today and it doesn't have the exact amount that you're looking for, right? You need to look for systems that can at the very least take some portion of the money so that you're not at a complete loss.
Okay. Thank you so much. So I'm going to take a couple of questions and then just to give more insights on direct debit before I come back to you again. Thank you so much, Unyime, for sharing so much. And I hope most people have been able to learn as much as possible during this short time. I will be back. Let me just pick a few questions that have been dropped and then talk through them with the audience. Okay, so I have the first question here that says, how can I cancel my direct debit after I have finished paying my loans? I am worried that a loan shark can start debiting me. So basically, I'm going to talk through how, because we're talking about from the lender perspective, English is hard. We're talking about from the lender's point of view in this instance. So I'm going to start from there. If you've issued a direct debit and you have done your repayment completely, automatically those records are being done inside all of that. So you can actually send an email to the lender and ask, okay, kindly cancel this mandate, and the mandate can be completely canceled. All you have to do is just send an email to the lender. I have repaid your money, cancel the mandate, and the mandate can be canceled. There is no too much drama needed. An email to the lender, I need this mandate cancelled, I've repaid my loan and all of that. However, most users would want their mandate to be kept open, being that they're looking forward to take another loan and you don't want to start the whole process again. So you might want to keep that mandate open. Of course, that mandate can only be used for that particular customer that you have initiated it for. So you might want to keep that mandate for reuse should you require another loan, depending on the duration of the mandate that has been created. So yes, a simple email to your lender, and the lender just goes ahead and then would inform whoever is a provider, and the mandate will be cancelled. There is no too much drama around there. I will take the next question. Do borrowers have to create mandate each time they're taking a loan? Absolutely no. It depends on how the mandate was created and the tenure of the mandate. If you've created a mandate that spans into 1 year and you've taken a 6-month loan, you can use that mandate again if the amount on the mandate covers for the loan that you're taking the next time, because the lender will want to ensure that the mandate covers for the amount that has been disbursed to you. I'll give an instance. Say, for instance, you have a 100,000 naira loan and you've done a mandate that covers for like about 200,000 and you've repaid your loan within 3 months. What happens is that loan has been repaid, but your mandate is still valid for like 1 year. If you go again to take a loan and you're taking a loan within the brackets of the mandate, which is like about 200,000, yes, the lender can disburse to you using that same mandate. However, if you're taking more than the mandate or the instruction that you've given, you won't be able to use that particular mandate. They'll probably ask you to go through another one and then set up another mandate that will cover the amounts to be repaid pretty much. So that's it. If you still have further questions about this, please drop it again on the Q&A. What happens when I repay a loan that has a mandate tied to it before the repayment due date? Ideally, how the system works is that before you're being debited, there is a check to confirm that you have a loan and the amount due is what is being sent to be debited. So if you've repaid a loan ahead of time, your loan is automatically going to be marked as a settled loan. It's no longer going to be an active loan. So settled being that you have repaid that loan and there is no other instruction that should come from that particular loan. So you do not have any other thing to do except if you want to cancel the mandate. If you're looking out to cancel the mandate, that's fine. You cancel the mandate, and then when you want to take a subsequent loan from that lender, all you need to do is you have to restart the process again of initiating a new mandate. However, if you're going to just use that particular mandate again for the second loan, you don't need to cancel it as at that point. I hope this answers your question, and I will be moving to the next question. Does Lendsqr have any APIs that can allow me to debit any customer if I know the BVN, since this is how to identify all these chronic debtors? Right now, as of today, we have other things that can allow you debit a customer, but not directly from BVM. What you're referring to here is what we call the GSI, the Global Standing Instruction, which is currently not available to everybody as of today. So right now, what we have is that you can leverage the solution of debiting the customers based on the details they have on our ecosystem. Say, for instance, your lender a customer has taken a loan from you and the customer has not repaid. If for any reason we see any information about the customer goes to lender B and maybe adds a different card, because these customers can have some of those fraudulent type of behavior. They might have a new card and add it to a lender B. We can do a recovery. We have those kind of community immunity system and checks in place where we will go to that and then recover that funds, and then you will be settled for it. So that's what we have now available for Lendsqr. Should you want to find out more details, our team is available to walk you through everything we have, and you can just reach us to us. What's the difference between the remitter direct debit and the one from NITS? How do they compare? Which one is better? Now, this is a trick question. Hope it's not someone that is from Remitter that's asking me this question. Anyways, so the difference is that one still has a bit of manual input and the other one is done completely online, depending on your bank. So there are some banks that will still require you to take the mandates physically to the bank on the remitter mandate, take it physically to the bank and then go and activate it. And also the timeline that involves activation. So you have the timeline, you have the fact that you have to physically print out those mandates and take them to a place to go and activate it. You also have how long it takes to do. Some banks use OTP on the remitter direct debit, while some don't. You have to just manually carry it. On NIPS, everything is done online. You don't need to move anywhere. The activation time takes between about 2 hours, which is a shorter time. You know, when you submit some of the mandates at the bank, some banks take it like for like 24 hours. That's using the remitter mandate. While on the NIPS portal, you have 24 hours. You have like about 2 hours. After 2 hours, you already know if that mandate is good, is activated or is not. How do they compare? They compare based, like Unyime had mentioned, they compare based on which one is using electronic and which one involves a manual input. So you still have to go to the bank for some of the banks on remitter, while some have modernized it, or will I say brought themselves up to speed where you can use like an OTP. Which one is better? I'll speak to myself. I would say the e-mandate, the NIPS one, because of the faster time, the fact that it has removed the constraint of going to the bank. And yes, those two alone is enough reason. Right now, a lot of people are trying to give loans online. They are talking about faster disbursements. Every lender is trying to push volume based on online basis and trying to remove all the mundane ways of using physical ways to be able to approve a loan. With that being said, you would prefer anyone that offers you an opportunity to just complete the transaction online and not have to physically go to the bank. If you're in Lagos here, before you say, let's step out from where you're going to and head out to your bank, you probably be stuck inside traffic, and then that's a whole different story completely. So those are the key things that you can take on from that. I would take the next question. So what's the difference between global standing direct debits and global standing instruction if a customer is requesting for a loan, and which among them is preferable? Well, so for the GSI, the global standing instruction, it gives you access to all the accounts tied to the customers, which means that even the account that has not been provided using a mandate, you have access to it. So obviously, being able to debit a customer across any bank at all would always be priority as well compared to that. However, for the direct debits, you only have access to the account in which the customer has issued a mandate on, meaning that if a customer has not mandated you to have access to it, you won't be able to access it completely, pretty much. So if Grace has given you an instruction, access my account that ending with ABC, that is the only account that you have access to. With GSI, you're able to access every account tied to the customer's BVN, not just the one that has been mandated to. So that is it. However, you know, for GSI to work, you still have to book that loan on a CRMS and ensure you don't just wake up one morning and say, oh, I have someone's BVN, I'm going to go and do GSI. The process starts from the point of when you are disbursing the loan all the way through. If you have further question, please just drop and I'll take it up. Can a lender edit direct debit schedule? after it has been activated. Is the lender trying to? Okay, you can pretty much just edit the schedule of your loan after the direct debit has been activated, and then yes, you can. So pretty much, if you need to update that schedule that is attached to the direct debit, so pretty much it. But this is for the NIPS, the direct debit using NIPS. That's the one we're referring to here. And yes, you can. I also want to start lending. What are the process for a startup? Okay, to start lending, the process is actually simple. Lendsqr has made it simple in the sense that you can start in under 5 minutes. All you have to do is set up your account. We have a team that will walk you through what you want to achieve, who are your target audience in terms of what are the people that you want to focus your loans to, so that we can tailor the loan products and to be able to suit those particular customers. So you can start up in 5 minutes. I will send you further information there. All you need is your starting capital. With Lendsqr, you just need your capital. You have the platform that can allow you to just start up. And then as the business progresses, you can now incorporate every other technology. So you can manage from your loan origination to when your users are onboarding, and also your repayment. You don't need to start thinking about how to integrate to all of these additional platforms. You already have them integrated on the Lendsqr system. You are just setting up your account, and it's like, which platform, like Shopify for lenders, pretty much the Shopify for lenders. That is what Lendsqr is. Yes, please. I will take the next question. When users pay 15 naira activation fee for news mandate and mandates are not approved, how can the lender find out why the mandate was not approved in order to respond to the customer appropriately? So we've created reports on the system that allows you to see why that mandate wasn't approved, why that particular mandate wasn't approved. However, if you're having difficulty in getting the information and the details from the platform, you can always reach out to us, and we'll provide you the step-by-step guide on how to check that directly from the dashboard. To that, yes, thank you. The next question: what happens when my account is not fully funded on the due date? How would direct debit help me recover my funds? So on the Lendsqr system, what we've done is that we've created something called partial debit. What does partial debit do? Partial debit pretty much just makes sure that if a customer doesn't have the full funds in their bank account, we are able to recover as much as possible. So we have sequences of amounts and configurations that are being tried to debit the customer. Say if I go to the customer's account using the mandate and I try X amount and I cannot get X, I will try an amount lower than X. That is it. However, if your account is not fully funded, so we will just debit the amount that we can, recover it, and then keep attempting until every amount is recovered up until the day the direct debits expire. So there will still consistently be an attempt on your account to recover that funds until everything is repaid fully. Thank you. Can mandates be used for various loans? Absolutely, on a particular lender, not across multiple lenders. So if you have a mandate for a particular loan right now, you can use that mandate again, as mentioned before, if only the amount on that mandate covers for the loan you're trying to take. For instance, scenario one, you've taken a 10,000 naira loan, and let's say you've taken it for like about a month, and you have a mandate that is active for about 3 months. After you've repaid it for a month, if you go to take another loan that is still within the activated amount, which is 10,000 naira, yes, you can reuse that particular mandate. However, most lenders would not want you to use it if you're coming back to take a loan that is higher than the previous mandate that you've activated, because what that does is that you're only authorizing the lender to have access to be able to take part of the repayment only, and not the full repayment in this instance. Do let me know if you have further questions. The next questions: in response to the difference between Reta as an inbuilt mechanism to retry failed transactions on a mandate for a given period of time for 3 months, while NIBS has a shorter period. So I do advise remitter and not see. I said remitter people are here. Thank you so much, Ire Odega. Thank you so much for that contribution. We really appreciate it, and this is noted as well. Thank you. You mentioned that NIPS mandate takes about 2 hours to be activated. After the activation fee is paid, it usually takes around 24 hours for the mandate status to move from pending to either activated or cancel. Why is that? So while the mandate might have been activated, just like when you're doing a regular bank transfers, there are instances where you've transferred money to somebody and you've been debited, but the person hasn't been credited. Everything works like a regular transaction. You've debited, you've transferred money to your mom or your friend, you've been debited. Your friend hasn't been credited, but on your own end, you're seeing that you've been debited. You're waiting for whoever is confirming, oh, has the money not dropped? Money has not dropped. It takes the same transaction leg as well. So it is when the status has been updated from the receiver's end that we can now display that to you. However, we always do multiple trials where we're trying to check the status for those particular mandates, every mandate that has been successful, so that we are able to get proper feedback if it has been activated, and also display this as well to the customer. Thank you very much. I want to start a lending business too. Can Lendsqr expert reach out to me on how to get started? Yes, please, we will reach out to you. I have gotten your details and we will reach out to you on getting started. So I'm going to take a couple of additional questions and insights on direct debits, which have been dropped. We're going to take more as well, just to explain and provide additional information of direct debit. So why direct debit? Why should anyone do direct debit across their loans? I'm going to give instances. So we have customers reminders, we have the custom registration form, relatively cheap, gives data of attendance, whether NIPS, whether you're using like remitter mandate, you have reminders that go to you have a customized reminders, you have registration forms that allows you to do it. It gives data of data of attendance. Pretty much you're able to give, if you have done a transaction, you're able to track all of those transactions in multiple times for that particular users. You're able to pull out reports that has to do with those particular users and all of that. It almost as if using the card, but this also provides insight as to why you should use direct debit. Like we've mentioned multiple times again, it gives you direct access into the customer's account. The other questions are, what are some of the common challenges or obstacles that lenders face when implementing direct debits? Like what issues could come up when you're trying to do this? So apart from the one of compliance you have to ensure that regulatory compliance is not everybody that can have access to this. You can leverage third-party infrastructure to be able to provide these particular services. But directly from lenders walking into, I want to do direct debit, there might be those kind of hindrance. We also have obtaining borrower's authorization, meaning that a borrower might not want to authorize that. So there are lenders that are like, oh, my borrower doesn't want to give authorization to their account because they're scared of XYZ. So there are instances where lenders will have to educate borrowers on how this works. You're mandating me to take X amount. Only that amount is what will be taken. I'm not going to go beyond this particular territory because I do not have the authorization to take more than this particular amount. And then there is the other aspect of managing the mandate efficiently, lenders being aware of what could happen if a borrower says, oh, I have started my mandate and I've stopped here. What could be the instance or what could be the issue that has happened? If a borrower say, oh, I've sent 15 naira, it's not activated. Or sometimes you have borrowers that they'll say transfer 15 naira, but they'll be like, no, let me transfer more, to transfer 100 naira. Even when it's boldly written, just transfer 15 naira. Borrowers who transfer 100 naira. Of course, in those instances, there will be a refund done to the borrower. What other process again? Setting up is actually very, very cumbersome. If you're a new startup and you're trying to set up direct debit, you have a lot of paperwork that needs to be done in all of that. So setting up can be very, very cumbersome. There also may be some customers that are also resistant, like because they're not familiar with it. Everybody's skeptical. You also don't want a situation where after you've given customers a lender access to your account, you're getting overcharged as well. And yes, so those are some of the challenges and obstacles that people might face when setting up direct debit. So I will go back again and take more questions. Let me just take this one while we're taking this. How can the lender recover his money if the date on the mandate authorized has passed and the loan has not been fully recovered? This is a complete pain when it comes to lending, and it's not just about direct debits. It's almost as much as recovery and willingness to repay. There are some of the things that we do encourage the lenders on our platform to do when they're disbursing a loan, before disbursing a loan, which is ensure that your risk acceptance criteria covers the aspect of the loan. Get as much information as possible from these borrowers to ascertain if you know these borrowers well enough and if you have the confidence enough to give them the loan. Because the economy is bad. Most people are looking for who to scam. Some people think that lenders are sharing government money. It will surprise you, but yeah, that's the thing. Most borrowers think that lenders are sharing government money, or they have too much money, that's why they can't give a loan. So there is that aspect. So what we do is that we focus on the underwriting of that loan. What are you putting in your decision model before you get into the part of recovery? Yes, you have the card. Yes, you have the direct debit. But when you're underwriting the loan, what are the checks you're putting in place? If you're trying to disburse a higher amount, you need to get more information from the customer. If you're trying to give a loan that requires a guarantor, you ask for the guarantor. And even on our system, we have guarantor details that allows you to go as far as even mandating the guarantor to be able to provide their cards, mandating the guarantor to provide even direct debit as much as what the user is providing as a method of recovery. So if you're giving those customers this particular type of details, or if they're providing with this kind of details, especially for the higher ticket loans, chances of them running away with your money reduces. And you won't even be disbursing loans to people that do not have the capacity, one, or the willingness to repay. Capacity being the money to pay, then the mind to pay, because they might have the money and not want to pay. Yes. So if the date has passed, the other recovery method is actually follow up. As long as the direct debit is no longer valid, you do not have access to someone's account to go and take money. That is where the compliance come in place, and which is the check that they put in place for users, for lenders as well, so that you cannot abuse the authority that you have. The borrower had already given you X period of time. You ensure that that X period of time covers the duration of the loan and more, should the borrowers default. So if you're doing a mandate, if you're giving someone a 1 month loan, you probably would want the mandate to cover like 3 months to create buffer in case the loan expires by 1 month and month one and something happens and the borrower is unable to repay. So yes, that's it. Thank you. How does direct debit help in reducing the risk of late repayment and defaults? One is the fact that the borrower has, the lender has access to, you have access to the borrower's account. Having access to an account is key. First of all, like my guest speaker had mentioned, when you have cards, with cards, you have access to either walk into a bank and cancel the card. If your card is if you report a card as fraudulent card, automatically they're canceling that card. But when it comes to direct debit, you cannot just wake up and just cancel the card. Most of the cancellation from direct debit always comes from the issuer, which is the lender itself. You're the one sending an email and asking that those things should be, the mandate should be cancelled for that particular customer. Not that customer can just bounce in and decide to cancel. How does it reduce? It reduces repayment days compared to when you have a card as well attached for the particular customers compared to that pretty much. Is there any plan for Lendsqr to integrate GSI method? Yes, and ongoing, yes. But for further details, this person, you can reach out to us, or you can drop your details as well, and we would get in touch with you for the GSI method. What are some common challenges or obstacles lenders face when implementing direct debit? So I'm just going to make emphasis on this. I'd already touched based on it, but I'll just talk through it again. So for lenders, some of the challenges they face, first of all, is regulatory. The other part is convincing the borrowers that it is safe to use direct debit. As you all are aware, in recent times, we have more fraudulent cases coming up every time. You're seeing users that are being, you have your bank account and one random person is calling you and telling you to give, kindly send me the OTP that was sent to you. And from your bank, we had an issue with your account. We've sent you an OTP. Kindly send the OTP that has been sent to you, and all of that. So those questions come up when customers are talking to their users who attach direct debit. They'll be like, I hope I'm not authorizing you to be able to take all of my money. You're being given somewhat type of power. So the person that's giving you that power needs to be very, very concerned that you're not going to abuse the power that has been given to you. Then there is the other aspect of setting up the account as a whole. For lenders that have been in business, the bigger lenders don't really have a lot of issues. But when it comes to smaller lenders, there are a lot of regulatory constraints around for you. But then again, you have Lendsqr. So your obstacles of implementing direct debit is gone. You don't need to start thinking about how you're going to integrate to NIBS, how do you integrate to Remitter, how do you talk to Remitter for integration. You just have Lendsqr plug and play. Lendsqr has both the Remitter direct debit and both the NIBS direct debit available for you. Then the next part is, I want to start lending. Can your team reach out to me? Yes, please. My team will reach out to you today to get started with your lending business. Okay. So I have one more question here, and I will be throwing these to my guests. Are you there? Hi, Unyime.
Hello.
Hi, how are you doing? Yes,
I'm fine.
I have one interesting question here from a user, and I just want to throw this for you. So basically, the question is, how many times would direct debit hit the borrower's account to debit for a loan repayment in cases when the account was not funded initially?
Okay, so I think it's more or less the recurring checks to check if the account has balance, right? So I think depending on the infrastructure you're using or the provider that you're using, some people have infinite checks, right? And the good part of direct debit is that unlike cards that you have a limit to how many times you can actually try that transaction, with direct debit it's almost infinite, right? You can just keep trying till you get your money back, so long as it's in the schedule of that repayment cycle that was created for that mandate.
Interesting. Again, cards are showing people shaggy. Okay, so there is one more question that I want you to touch base on as well for me to provide insight. Does direct debit help in reducing late repayments compared to cards and also the default rates?
Well, at the end of the day, it's back to the borrowers, right? If they want to pay back or not, right? Because I can mandate an account and decide not to credit it, but at least one thing is certain: the risk there in comparison to the other payment method is less, right? But yeah, I would say that if indeed the borrower wants to repay, in terms of you from lender's perspective, collecting your money back in that payment through that payment method is simpler, it's easier, it's faster, right? And then the repayment cycle, yeah, but again, it still boils down to the borrowers being truthful enough to want to pay back their money, because I can clear my account.
Okay. I will just throw this final question to you before I just let you go. Is there any reason why a mandate would not be activated? Pretty much.
Yeah, there are different reasons. For the paper one, they could be signature irregularities. They could just be the being slow, right? Sorry to the banks, but yeah, just could be the bank just being slow. And then, from the borrower side of things, you have to kind of chase them, follow through, and follow up with that to be distant. For the e-mandate aspect of things, one of the use cases there, maybe the customer just did not even transfer the money, and they could say they transferred the money, right? So they could just be those, hitches here and there. And they could be system downtime is one of the things that we are more or less used to. So those are like the edge cases that could happen for your mandate not to be activated. But most often than not, right, it has a higher success rate than failure rates.
Okay. All right. Thank you very much. So I'll just take this other one. Thank you so much. Is it possible to use direct debit on customers who work with federal government and their salary is paid by the federal government? Do we need a card for this purpose? You have the option of using both. So yes. So the direct debit is done directly on the user's account, irrespective of who is funding the account. The debit and the instruction is going directly to the customer's account. So you can use card for these users. You can use direct debit as well for those particular category of customers. Thank you so much. And I would take the next question. which is how does Lendsqr ensure security and reliability in processing direct debit transaction? So for Lendsqr, it all boils down to every other transaction and the confidentiality of the information that you've provided as well. Just like how everybody's been mandated that you must be, the customer's details that have been provided to you are being kept compliant, something like that. It's the same thing that happens to transaction. A user initiates a transaction. Mind you, the details of all the transactions that are being initiated, the transfer is being done from the user's phone. So first of all, Lendsqr doesn't have access to the bank accounts that the customer is at the point of transferring. When the instructions are being done, it is based on only and only the amount on the mandate. So the reliability here is that no amount higher than the amount that has been done on the mandate is being sent to the customer's account. So there won't be an instance where a customer is being debited 200,000 naira when there is 100,000 naira mandate. In fact, the instruction doesn't even carry all of those details. So you cannot even go beyond the threshold of what you've done, except if the money is being gotten in bits. Yes. So yeah, the security part is that our system is pretty secure. We ensure the end-to-end process of this, and all the data that has been provided to us, we all are very compliant with it as well. And we keep lenders in loop of all of these informations that have been provided by the users as well. Do we need a permission or mandate from the customer before the direct debit can be activated? Activation is done directly by the activation is done by the user. So the user would have to manually fund the account using the process of the direct debit. Don't worry, we're going to share at the end of the session, we're going to just, when we're communicating the information following the webinar, we're going to share how to set up a direct debit. And should you need further demo or presentation on how to set it up, we can walk you through. So customers are made to transfer exactly the amount that is being written on it. So if you do not transfer the amount, it will not activate the direct debit. It's almost like you started the process and you did not finish it. So for it to be activated, there must be a transfer coming from that particular account. And the account that is being used to make the transfer is the account that is being used to set up the mandates, not other accounts. It doesn't work like the GSI as well. So yes. Okay. Hi, everybody. Thank you so much for coming. I really do appreciate the time. I really do appreciate everybody coming here. It was a very, very nice interactive session. As usual, we keep this very, very simple and up to time. We ensure that we don't take too much of everybody's time, just so that we can get back to our busy schedule and all of that. So thank you so much for coming. I remain your honorable host.